I think what we want to do is we want to have coverage across the entire globe. So generally speaking, we're based in London. We're a part of the London Stock Exchange Group. So we're headquartered in London, but we have major operations in New York as well as Hong Kong. So generally speaking, we cover the entire regions, all the regions. Consensus is a great blend of tech firms, kind of classic traditional finance firms, investors, exchanges, regulatory bodies. So it's a good blend of participants. So one of the things we do that's different than the competition is we connect to centralized exchanges, we vet exchanges, we ingest a huge number of transactions, we vet assets, we basically qualify them. So it's a way to establish trust. So we don't want to take in all data. We don't want to take in trades that don't really match the market. So that is a way to differentiate ourselves. We also use some sophisticated pricing methodologies that feed our indices, so clients have that flexibility across the product suite. So we're a traditional finance firm. We follow, we've been doing the same thing for decades in equities, fixed income, commodities, etc. In crypto, we don't want to have that same mentality. We want to be more modern. We want to think about new technology, new data sets, and be very closely connected to the industry. It's really about data. We just try to keep in touch with the industry, make sure we're getting new data sets in all the time. We blend a combination of sort of off-chain data, so exchange data mainly, but also on-chain data. So we want to cover as much data as we can and then frame and measure the market accordingly. That's just a matter of staying in touch with the industry. So we need to make sure we're paying attention to our clients, our prospects, making sure we're up to date on all the protocols, paying attention to where the market cap is big for us. We need to make sure we understand where funds are basically accumulating assets. Really, it's a regulatory question, or a regulatory answer. So the regulatory bodies across the globe are all completely different, and where they are in kind of the journey is completely different. So Europe in particular, they're setting up a framework. There's something called MiCA that we're paying very close attention to. It does kind of follow suit with a lot of our vetting processes. So some of those MiCA approved or MiCA compliant assets will tie into our vetting process. So if you think about what we're doing, we're making sure the assets have market cap, like significant market cap, significant liquidity. If they don't, we won't really cover them. So there's going to be basically parity with some of our assets and those MiCA compliant assets. So MiCA is a framework in Europe. We expect the same thing to happen in the US and as well as Japan, as well as Asia. We think there'll be a framework. We don't know when, but we think that will happen in the next, let's say, 12 to 18 months. We think there'll be a framework that the regulatory bodies will communicate to the market. The firms that are a little bit hesitant to enter the space, we think that will give them that clarity, that comfort to actually enter the market and start investing, basically. Not quite yet, actually. I think it's still pretty early. I think the administration change that happened a month ago, the actual changes have not happened yet. I think the overall vibe has improved, but the actual changes, the regulatory changes, are not in place yet. But we do expect those to happen soon. So an example would be the Bitcoin spot ETFs that were approved about a year ago. We expect those to keep trickling in and keep being approved. But the more sophisticated products, we think those will have much better traction this year than they did in the past. And in the past, they ultimately had no chance. So with the new administration, we think something like a good example would be a product that allows someone to stake. So if you want to stake your position in an ETF, as an example, that's not possible now. The companies that would produce these products, they're not even submitting applications for that. But they wouldn't have before the new administration. Now we think those applications will go in. We don't know if they'll get approved. That's to be determined. But we think the chances of them getting approved are much higher this year than they were in the past. So FTSE Russell is a traditional index provider. They've been around for decades. This is a little bit different because what we can do is we can cover not only new digital assets, so just think cryptocurrencies and kind of the standard tokens, but we can also blend with other asset classes. So that's a big differentiation point for us. So if you think about like the FTSE 100 with a 5% Bitcoin component, or you could do a number of different things, but that's a big selling point for us where we can kind of stand out from the rest of the market.